And good afternoon. Welcome into Market Talk for Monday, November 16th, 2020. I am your host, Jesse Allen. Great to have you here. MarketTalkAg.com. That's where you could find us, our home on the web, Facebook, Twitter, Instagram. It's all at Market Talk Ag. And big shout out to our radio affiliates, including KMA in Shenandoah, Iowa. We appreciate them being a part of the Market Talk family. Well, Monday, we got a good start to the week, it looks like, in the market trade. Let's bring in our guest today. Bryan Doherty with Total Farm Marketing by Stuart Peterson is joining us here today. Bryan, how are you?
Jesse, I'm great. Thank you, and hope everybody's safe. COVID's really starting to exasperate itself. So
Yes,
good
it
luck.
is.
Yeah.
Hopefully everyone is safe as well. And you bring up COVID, and I think that might be a place to start with this market trade today. I know we got more positive news on the vaccine side, and it sounds like that kind of helped the commodity markets here today, Bryan.
Yeah, I think it did. It helped the stock market. It gave just, again, general sort of life to pent up money, I'm going to say. At least that'd be my reason to believe prices moved higher today. But we saw really firm closes in corn and beans. Corn about a nickel higher, and then soybeans in that 6-7 cent higher, continuing to kind of consolidate after the big surge last week on a favorable USDA report. And even the wheat market participated, making a turnaround late in the session and turning positive after trading about 7 to 8 cents lower earlier in the day. But the Dow Jones up over 400 points, approaching all-time new highs, just under 30,000. So there's some movement going on for sure. And given all the uncertainty with the election and a few other things like COVID, it's pretty amazing to see.
Definitely is, Bryan. Well, I know after we talked last week, we saw some of those numbers with the USDA reports come out and saw some big run ups, and then we saw a little bit of a downtrend Thursday, Friday. Now this rebound here today. Let's start with that corn market. We're sitting around those resistance areas, 420, 425. Kind of in that area. Good day today, up 5 and almost 6 higher in December corn, almost 5 higher March corn. What are you seeing with this corn market after today?
Yeah, thank you. Yeah, we'll dissect the December contract, and it bleeds over into March. But December
Mhm.
up 5 3/4 today, 416 1/4. Now the high last week, to your point, came on Wednesday. So the reports were Tuesday,
Mhm.
had a pretty big surge up, and then we had some follow through on Wednesday, but then finished lower. So that's called a hook reversal. Kind of a scary signal when you're at the top of the market. Probably the scarier signal would be what they call a bearish key reversal. So this is a bearish hook, which just means it turned lower and finished lower in the day, but it didn't take out the previous day's low. So a signal, but one that maybe, I think and we believe that what probably happened is that prices surged 15, 18 cents in that area after the report. We think farmers pushed a lot of grain into the marketplace. So there's that.
Mhm.
And then traders will often, when you get a report, if you hit it right and the market goes in your favor, they'll run their what they call sell stop orders up underneath. And it's likely that when prices tipped over, then it trips some of those sell orders. So traders or anybody in the market may not necessarily be selling because they're negative. It's just the market tipped over, so it's trigger. We call it trigger. It's trigger them out of the
Mhm.
market. But then good consolidation. So prices came right down. If you look at a chart, you've got kind of this up and then back and up and back and up and back. And then you can connect the bottom line on this chart. Went right down to the bottom line and found buying interest on Thursday morning or Friday morning, finished with a little minor hook reversal upward, then good follow through today in corn.
Yeah, and just looking at this, the follow through you mentioned, the export wire was pretty quiet today for everything, but obviously, producers, looking at this is maybe at least a little bit of a positive sign with this little bit of an uptick today in corn.
Yeah, today looks encouraging. We'll see what tomorrow brings, but the overall trend remains up, and you can't get away from this idea that look, we saw 3 months ago, right mid August, carry out expected to be roughly 2.7, 2.8 billion, and now it's 1.7. So that's
Mhm.
a lot of corn bushels to lose in a 3-month window without a weather market. We didn't have a drought or something where all of a sudden the yield was peeling downward week after week. Just a combination of adjustments to old crop on the stocks report, just chipping away at yield, increasing the demand. Really big surprise in the demand number last week. Over 300 million bushel increase in projected exports. That's huge. And now we need to see it. Now we need to see those sales come through.
Definitely do. Let's switch over to soybeans, Brian. Good day there today. After the reports, a lot of people were cautiously optimistic that $12 beans on the board might be possible. And then it kind of, again, we saw a little bit of that reversal. We found looked like maybe some profit taking Thursday, Friday. But again, a good day in beans today. What are you seeing in that market?
Yeah, same type of story. Really good reaction to the report. A little bit after the day after, then kind of, and that's not unusual, in the winter months or fall months when you get a report because that's friendly. The market
Mhm.
reacts, and then I think a lot of people pause and say, "Well, what's next? We don't have there's not a report for a month. The crop is virtually harvested. We don't have crop ratings every week. We've got sales, but this year we focus on South America, and so you're entering more of the rainier season, better moisture prospects, and while South America." And when I say South America, I'm primarily talking about Brazil and Argentina
Mhm.
in particular, Southwest Brazil, maybe Northeast Argentina. They have certainly received some moisture, but by many accounts, not enough. And the drought monitor maps are still showing this, what I'm going to call pesky dry conditions down there. So less than ideal. And you're starting to see some people write about already that it's probably already beyond the point of reaching a record crop. So starting to look at maybe the crop leveling off in size. And our beans just kind of keep chugging up. They sure look like they want to get to $12.
And I think a lot of producers maybe are sitting out there right now. If they got some beans in the bin, they're waiting on that. But as we've talked multiple times, it'd be nice to maybe get a floor underneath you just in case we don't reach that mark. It seems like it's very optimistic we could, but also if you got room for taking some profit here, you should at least protect yourself.
You and I could spend all day, all day talking about outlook and what could
Mhm.
happen and a lot of what if scenarios. And then if the market responds or it doesn't respond, I think you just hit the nail on the head. It's really more about kind of strategizing here. How long, if you've got a bunch of beans, and there are some people that do, how long do you wait until you sell? How much risk do you want to take? On the other hand, a lot of people said this year, I can't take any risk when they hit certain levels. They really unloaded beans. And it's, by all accounts, maybe 70, 75% of farmers or the beans that farmers have been already sold. Good recipe for bull markets. They say when farmers are holding a lot of inventory, you generally don't get bull markets.
Mhm.
Um, so it's that balanced approach. So we'd look at if you have beans in the bin and you want to ride that horse, your risk is the prices go down. So you look at purchasing a put option. That's basically buying futures price insurance under the market. That leaves the top side open, covers the bottom side. So you're balancing yourself. You're not all teeter-totter to one side. And the same thing if you sold beans, then you want to look at some kind of a call or fixed risk call spread. Calls are pricey right now. Why are they pricey? Because anybody who's selling that call realizes we're one dry weather scare in South America from beans really taking off. So a bull call spread, you buy a call, sell a call. That's a way to reduce that time value and volatility because you're buying an option with time value and volatility and you're selling it out
Mhm.
of the money option with time value and volatility.
To me, listening to that explanation, it almost seems like a put might be the safer option of the two, but I guess it all depends on what you're used to and what you're doing.
Yeah, safer is relative. For example, let's say futures prices take off in beans, but cash doesn't. Okay, so you've got the beans in the bin, but they're not moving with the market. So some will argue, well, that's why you want to sell your cash beans when basis is good.
Mhm.
But the put is pretty straightforward. It's pretty simple, and it gives you control of the ownership of your beans to sell them when you want. And then when you do sell them, you have that, let's call it ability to say, okay, I've sold my beans. Now I want to sell my put and salvage what I can, because if your beans went higher and you sold them, you're going to reap the benefit of that, but your put option is going to lose value because as futures go higher, puts lose value. Um, so you may reap the reward on the cash, but give some back on the put. On the other hand, you may sell cash and say, well, I'll keep the put. And who knows, maybe 2 months from now, prices tip over and now the put makes you money. So,
Mhm.
so it gives you some flexibility to work with.
Very true. Good insight there, Brian. Looking at the wheat markets, again today, up day there, and this has really been a weather market as well. But for any of our wheat producers listening in out there, any insights there you want to share with us today?
Russia stays mainly dry. However, the world supply of wheat, as echoed on last week's supply and demand report, the world's not going to run out of wheat at anytime soon. So
Hmm.
it's kind of this tug of war between countries like Russia, the U.S., Argentina, countries that may export, struggling with dry weather. And from a food security issue, how much do you want to get rid of or sell with this whole COVID thing? Yeah, what if COVID, slows shipping lanes down or what have you? So there's all kinds of variables. The weed market looks tired to me, though. It looks tired. It peaked and then it tried to rally back, did not take out its high, took out what we call the neckline on a head and shoulders formation. So it looks a little tired. Nice bounce back the last couple of sessions, but I would suggest that the wheat market's going to need something new to get a lot of people interested in buying this because the supplies are adequate. That being said, look at a drought monitor map in the U.S. and the Western Plains, North. It's just dry,
Hmm.
and that's always a concern going into the winter.
Well, definitely some things to consider there. Kind of keep watching this weather market in wheat. Brian, let's switch over to livestock. This cattle market, with everything in livestock, we've kind of been watching COVID. That's been the big thing. We saw a little activity in the countryside last week, it seemed, but not a ton. Really, it took till later in the week. Today, cattle just pretty content to just stay quiet. What are you seeing in this cattle market as we?
Yeah, I see a market that really can't gain any bear traction or bull traction. Like you say, quiet. If you were to look at a chart that represents the cutout values,
Mhm.
you had this big spike in after summer and or in midsummer, but other than that, really flat line between choice and select cuts, and just overall the kind of the demand. So the market's kind of floating along. When you look at some of the, bigger picture perspectives, um, have we reduced the herd a little bit? There's some reports say maybe we did, maybe 1%, 1.3%. Um, I don't know. Corn's been pretty cheap other than recently, so I don't know if we've reduced the herd. But at the same time, there's such a tepid feel for the restaurant industry right now with
Mhm.
this COVID that it's tough to get overly optimistic, but it seems like the consumer's buying it. They're buying it and taking it home and cooking it, but the restaurant industry is kind of very visual, and that's it's still a concern because you'd really like the kind of the 1-2 punch of the restaurant industry plus consumers who now are willing to buy a steak and cook it at home. It seems like, but um, I don't know. Everyone being cautious. We're not seeing the cattle market gain any traction. We ultimately think that the winter months will look better. They
Mhm.
typically do. And you look at the stock market, and you talked about maybe more rhetoric on a vaccine. Things could be pretty positive for cattle if we can get some positive traction. We're just lacking traction.
Yeah, and that's kind of the thing that I would fully agree with you there. Just been stuck in this sideways range, lacking this traction. We get the positive news about vaccines, and then we hear about states having record cases and possible new orders. So it's very much an interesting market, at least from my perspective. But like you said, seems like more people are really, they're taking steaks home, they're cooking at home, and you think about the holiday season, you wonder if that could give a shot in the arm to the market, even if we're going to have smaller gatherings, but we're going to most likely be at home.
Well, you hope so, and traditionally we come up on Thanksgiving, we talk about well the big Thanksgiving weekend and the turkey, but really the buying for
Hmm.
beef is probably the week or two before Thanksgiving, and so we'll see if we can get any follow through into that next week. But it just looks like a market that it's lacking a demand driver or catalyst this year, um, and that and even the feel of it. How much you want to be friendly beef on maybe export activity? Well, what if the export lanes get shut down or what have you? There's just all of that kind of what if. I just hard to get a real good feel on that livestock industry as a whole. Hog, same thing there too, Jesse.
Hmm.
Kind of looking ahead, it looks like China's on a pretty fast track, and they're populating their hogs pretty quick. It's probably over 80% before or capacity from before swine, African swine. Maybe it's even
Hmm.
higher. Um, just read an article about these Hilton hotel hog facilities in China that are vertical, so look like big hotels, and they'll raise hogs on different flooring, and so hogs, poultry in that part of the world, good for corn demand, good for soy meal, not necessarily good for pork demand out of the U.S.
Yeah, and that's, the one thing that we've been hoping for all year long is that demand from China and overseas for a lot of our commodities here in the US. And you mentioned that. And if I'm a hog producer, I'm wondering, do I start to get a little nervous just because that China demand's been a big thing that's maybe, you know, been something that's helped us keep this hog market together this year?
It has, and markets move on a couple of things. I always say they move on PMA, perception, momentum, and attitude. And the
Mhm.
perception is, look, we're likely to capture a lot of activity in business from China. We got trade deals. China needs it. It doesn't seem like they're knocking the door down for pork, although we have record amounts of pork to China. You kind of think, well, boy, with all this African swine fever, in theory, kicking their herd about 50%, maybe 40%, that we'd see all kinds of activity that we can't keep up, but really hasn't been the case. And China's pretty quickly, and they've said it before, they really like to be self-sufficient on their meat production. And, um, I think they just find it probably easier to import corn than probably pork, where you got to keep it
Mhm.
cooled and have special containers and such versus a bulk commodity.
Brian, let's get an update on the dairy market. I know you're very well versed in the dairy industry. What do we see there today, and just kind of looking ahead as we go through the week?
Yeah, a little bit of a bear spread activity. The back months have really kind of got chewed up here. It's been really volatile. When I say the back months, I'm talking like the January, February contracts, a couple of really tough sessions in a row here. Um, Growing concern that the food lunch programs or the programs that utilize cheese may not come about, or if they do in a limited fashion. And so the market is concerned about that. You've got a huge discrepancy. Let me give you an example. You've got November milk at 23.01. Okay, and that's down 12 points today. And then when you look at the December milk, you got December milk 16.72, down
Hmm.
99 today. Down 99. That's a big percentage point one day. So we think the stops are probably triggered there, and then you get to the back months, and there's 16s in front of everything. So
Hmm.
so it's a tight supply situation near term, ample supply down the road. Quality corn harvested this season as a whole, quality feed. No real concerns on that end. So it's hard not to imagine when you see milk prices jump the way they did, and now they've been
Hmm.
prolonged in these higher levels, that the herd isn't, it'll expand some. I don't know if the dairy industry is smart enough to say, let's put the brakes on. um, it's an industry that does something really, really well, and that's when they get a price incentive, they produce a lot.
Some good things to consider there. Brian, any other thoughts you want to share about the markets today that we didn't get to?
I guess what I would maybe suggest, again, for some of your listeners who maybe they're in some kind of a retirement plan, really, to me, really watch that. We're heading into a really uncertain political environment right
Hmm.
now. The election isn't called yet. Trump hasn't given up. There's all kinds of talk about this and that. And I don't see how in the end that makes for a strong stock market. So if you have investments in those, you might want to look at talking to an investment strategist, or the futures market offers puts in there too. We talked about puts for some of the other markets, maybe soybeans, maybe for the Dow Jones. So I'd be leery of that. I don't think things like the energy markets are ready to get away from anybody right now. I don't think, you can probably go hand them out there if you want to lock in, fine. There's probably not a lot of downside, but probably not a lot of upside either. Not until we get past this COVID.
Very true.
I think that would probably wrap it up for me this week. It's a week in front of Thanksgiving, so the trade has a tendency to kind of quiet down as the week wears on. And traders, they call traders, people who might monitor the markets, have a tendency to sort of take it off next week. So we'll see. I wouldn't necessarily buy into that, but it more times than not, you see a very quiet market.
Very true. Well, we'll see what happens. Bryan, if producers want to reach out to you and get a little help with marketing advice with Total Farm Marketing, how can they do that?
I'd ask that I think the best way to do that is just give us a call. Punch this into your phone and call me later. 800-334-9779. Again, 800-334-9779. Let's just have a quick chat, see what we can do to listen well and provide guidance and opinion if you want it. So that's probably the best way to do it. They can get a hold of us on our website, www.totalfarmmarketing.com. We've got an app that we're just coming out with. So if you want to look in the App Store, Total Farm Marketing, look that up. So that's what we got there.
Yeah, I'm gonna have to go check out that app, Bryan.
Yeah, it's I might flub up here, but I think you can just Google Total Farm Marketing and it'll show up. But it might have to get a little more specific than that. It's brand new, hot off the press. So
hot off the press. Well, we like
hot
that.
off the press. Yeah, I've actually I've got it on my phone, and it's colorful. It's easy to read. It's got prices on there and some of our content from our report that we write. So take a look at it.
Love that. Well, I'll do that when we wrap up here. Bryan, I appreciate the time as always. And I know you're off next week, but I know we'll probably catch up after Thanksgiving. So
you bet. Yeah, I'm out, not here Monday, so we'll catch up after Thanksgiving. And we'll wish everyone a safe holiday season.
Definitely. Bryan Doherty with Total Farm Marketing by Stuart Peterson. Thanks for being on Market Talk today. Appreciate it.
My pleasure. Thank you.
You can learn more at markettalkag.com. Find us on your favorite podcast sources, including Apple Podcasts, Spotify, iHeartRadio, and more. This has been the Monday, November 16th edition of Market Talk. I'm your host, Jesse Allen. Have a great afternoon.